Hey everybody, Rob Maurer here, and today we are going to be going through Tesla's Q2 earnings call. Sorry about the issues on the actual live call. Hopefully you guys can give me a heads up if everything is working now. But I do apologize for that. Obviously, extremely frustrating for me. I did test it and everything was working good, just couldn't get things fixed. So we are going to go through just the normal call takeaways like we normally would do after the earnings call. I'm just going to wait a second and again make sure that everything is working here okay. So let me know in the comments and then we'll continue. Someone says no audio. Great, that's nice. Just gonna wait a couple more seconds here. Perfect now. All right, thanks Todd, appreciate that. All right, so as usual, I went through and took the normal notes on the call. So we'll kind of go through in sequential order. I've bolded a couple things that are stuck out to me as major big news from the call. But we'll start off, Tesla said that they're continuing to target 1.8 million deliveries. The slight decrease, though, expected in production in Q3 for what Tesla called global factory upgrades. So kind of interesting to hear about that. Obviously there's been a lot of rumors about Tesla and Project Highland. It would seem that that would be scheduled now for Q3 with Tesla talking about these upgrades to come. So that's going to not only hit production, probably hit deliveries as well, depending on how much inventory Tesla works through. And it will also hit margins, as Zach mentioned later in the call, due to downtime and just spend for those production upgrades. So we will have to wait, and see on that, but should expect declines in the third quarter. Going from there, Elon talked about the robotaxi that they're working on, the next generation vehicle, said it should have quasi-infinite demand, talked about it being not only revolutionary from a software perspective with FSD, but also from a hardware and production standpoint, which we heard a lot about at Investor Day. He said it'll be the highest units per hour ever created in terms of production for vehicles. Talked about AI. With AI, more training yields better results. No one can come close to Tesla on training capabilities. He said that through Dojo and continuing to grow their NVIDIA GPU cluster, they may 100x or more their neural net training capacity or capability by the end of next year. So we've talked about that. That's just a ramp up of their training capabilities through their hardware, like we talked about with Dojo and the A100 equivalents in terms of I think getting to 100 exaflops by end of next year. Licensing. So interesting here, he mentioned kind of offhandedly, they're not licensing supercharging. So there wasn't really much discussion on that. And interestingly, not really any questions on how Tesla's structuring that from a business perspective. But Elon mentioned not licensing it, just opening up the network. So we'll, continue to wait for more information on that. But then he mentioned that they're actually very open and in early discussions with a major OEM about licensing FSD. Who that OEM would be, who knows? But I think Ford has been very receptive to working with Tesla. They were the first to adopt NACS. It would seem like they would probably be the most likely candidate. Obviously, they have their Blue Cruise system, Blue's Clues, whichever you want to call it. But they do have that, although they have also mentioned that they specifically are only really going to be focusing or prioritizing development of sort of a level 2, level 3 type of systems. And they've essentially given up on level 4, level 5, with Ford talking about how really their goal is to give people time back through those level 3 type of systems where maybe they can have eyes off of the road. So interesting. We'll keep an eye out for more on that, but that would be huge news. We've seen the reaction since the initial announcement of the Ford supercharger adoption. If they also announced FSD adoption, I think that would be a pretty massive fundamental inflection point for the stock at that point. All right, back to the current business. They noted, as we talked about going into it, as we talked about after the shareholder letter, the current top priority for the business is just maximizing investment, making sure that they are being able to make these investments in these things that they're so excited about in the product roadmap. And then the second priority alongside it is to maximize volume, but doing it in a way that can support that expansion. And that's what we talked about as being so valuable for Tesla right now. They're able to grow these economies of scale, grow the infrastructure for their business, and also support that through the cash flow on the current business. Elon mentioned later in the call that it's pretty crazy that they're in this capital intensive business. They're investing in an insane way, I think was the words that they used. And yet they're still able to be free cash flow positive while doing that. So that's what Zach was talking about, and it really just reiterated the focus over the next few quarters is going to continue to be that. Not necessarily focused on margin for those specific quarters, but I think Zach put it really well. And once these quarters go by, they're in the past, and businesses are valued off of the net present value of their future earnings. So once the earnings are in the past, it's done. And like we talked about going into this report, the reason people care about the margins and things like that is because of how they extrapolate into future quarters. It doesn't matter if Tesla earns $2.5 billion or $3 billion this quarter, but it matters what their margin is, because then that will yield, half a $1 billion difference in every single quarter going forward if the margins stay the same versus a lower level. So that's why people care about it. But with Tesla, there are going to be these new products that Tesla develops and integrates and unveils and releases over time that fundamentally change that equation. So that was the focus. Right now the business is just about getting enough cash flow to build those things, and those things change the business going forward. That's kind of always been the story for Tesla, but at a certain point they just got big enough where people were excited about the actual fundamentals of the business versus the future products, and some of that long-term perspective I think has shifted over time. So a great reiteration there of what we talked about going into the call. All right, so upgrades will carry some costs. That's just about the factory upgrades. We talked about that. 4680 progress. It sounds like things are progressing really well. So 80% increase in production at Giga Texas for 4680 production quarter over quarter. They surpassed 10 million cells produced in Texas. So they had given that update on Twitter. It was a little bit unclear if that was total or in Texas. Our thought was that it was specifically for Texas. That turns out to be correct. And then he said that they've achieved a 25% reduction in cost of goods sold on the cells at Giga Texas quarter over quarter through a 40% scrap rate reduction. So that's a massive reduction in cost quarter over quarter. We talked about how this is hitting Tesla's average cost of goods sold on all their vehicles as that gets amortized across vehicles made in Shanghai, right now. So as this continues, that will help the business continue to look better from a fundamental perspective. So great to see that. They also mentioned that the energy density on their next generation 4680 cell, which sounds like it's either in production or going into production right now, would be 10% higher than the current cell, which it's roughly in line with energy density from Tesla's other vehicles. We've talked about that with the standard range Model Y. So it's sort of right now coming in around the benchmarks that Tesla would have with their other cells. So for them to now be able to do a 10% higher energy density would be, I think fantastic progress in that sort of short period of time. I know it feels like a long time, but relatively short period of time that Tesla has been producing these cells. And they said that that was without silicon and without additional cathode improvements, which would continue to drive energy density up and cost down. So pretty big updates there on 4680, and was glad to hear about those. So maybe I mentioned this, but they're calling that next generation the Cyber Cell. So it sounds like that would be used for the Cybertruck, and they're confident in having that up to enough volume production to support volume production of the Cybertruck next year. Okay, so 4680 system. So although these are cell-based improvements, a lot of what is being done with the 4680 is the entire production process. Tesla focused a lot on that at Battery Day. Drew said that they're realizing those advantages as Texas scales up. So good to kind of reiterate and focus on that as well. Energy. So we talked about the margin. They didn't focus too much on margins in this call, but for energy products at least. But they did say that they can't talk about future products. With the current products, Lathrop is, the mega factory in Lathrop with 40 gigawatt hours. It's ramping up to meet demand for the second half of the year. And the second line is scheduled ahead of the second line of production for the Lathrop facility is on schedule ahead of the full factory ramp in 2024. So it sounds like it'll be probably still a bit of time, maybe a year from now, where Lathrop is really at that sort of 40 gigawatt hour capacity. So we may see the growth stall out a little bit until that second line comes on, and then you got a little bit of a jump there. 500,000 Powerwalls installed. They recently hit that milestone, so we'll have to go back and see what the previous milestone was. I don't have that handy, but we can kind of extrapolate production and install rates from that. Question was asked about cost of goods sold per unit from the IRA. Zach reiterated previous guidance, so kind of a waste of a question, but $150 million to $250 million per quarter. They said that Q2 came in that range. They said that they split that benefit 50-50 with Panasonic. I think that's before they're, considering the range that they gave there. So Panasonic probably benefiting in a similar magnitude. Commodity prices improving, lithium most notable, as we talked about before the call, heading into it in the preview, seeing benefits in other commodities like steel and aluminum as well. And they said that the improvements there were similar to the benefits from IRA quarter over quarter. S&X mix increased, so that helps ASP, but it also increases the average cost of goods sold, which, as we talked about, did decline $1,200 quarter over quarter. So if you take out S&X from the mix, that likely means, I'll have to do the math on it, but that likely means that the decline sequentially for Model 3 and Model Y would have been bigger than that $1,200. So nice to see that. FSD transferability. I had to laugh when this one came up because obviously I wasn't a huge fan of the question. I'm still not a huge fan of the question. The reason for that isn't because of any opinion that I have on this topic, although I do have an opinion on it. It's more so that I just don't think it's a really appropriate question for an earnings call. I think it's more of a customer-based question. So that's my frustration with it. But Elon did say they're going to allow a transfer in Q3, so congratulations to those people that wanted that. He said this is going to be a one-time amnesty where they'll allow this transfer. The timing is interesting because that's definitely a lever for Tesla. You know, that's going to cause people, especially if it's just a one-time thing, like, hey, do it now or don't do it ever. If that's the case, that's going to probably trigger quite a few orders. So an interesting lever for Tesla, and I guess, you know, that does have some business relevance for a short period of time. Over the long term, I don't think it's very relevant, but it'll be interesting to see how they handle that this quarter. Maybe they would temporarily increase prices too. I don't know. We'll have to see on that. But it's also going to mean a lot of new or used Tesla vehicles hitting the market at the same time. So we'll see, you know, what their plans are for that for this quarter. Cybertruck demand is off the hook. A lot of new tech, a lot he reiterated. So just like we saw in the shareholder letter, which, by the way, make sure you go back and watch that, you know, reaction in the shareholder letter. We're focusing on the call here. But for the Cybertruck, reiterating that there's just a lot of new technology. The ramp up is going to move as slow as the slowest part of the ramp up across, you know, 10,000 different parts or something of that magnitude. So just trying to caution people that this is going to still be a slow process, probably painfully slow, that we're now this close, but still confident in high volume production next year and delivering the first vehicles this year. I don't think that there was any mention of specifically in Q3, so I guess we'll just have to stay tuned on that. All right, gigacasting repairability. So just kind of a question there, quickly answered. They said it's, you know, people overestimate the simplicity of current vehicles in terms of their repairability. There's a lot of different parts that have to all be fitted together versus just swapping out the casting potentially. Tesla said this is 10 times cheaper and 3 times faster than the Model 3, so just kind of a red herring in terms of those questions. And then for Optimus, Elon said that they're, you know, currently there's maybe 5 or 6 bots or 10. It just kind of depends on what you view as a bot and what stage of development, but said that they're making more bots every month. Lots of interesting things right now. They talked about the actuators for the Tesla bot, which they've talked about before. None of them are really available off the shelf. Tesla has to design and produce these, and they should be able to produce the first Optimus with fully in-house actuators sometime in November, and then try to ramp up production after that. Obviously, at first, they're going to use these in their own factories and over time expand from there. But Elon thinks that they can start using these, doing something useful in the factory at least sometime next year. So I think that's going to surprise a lot of people. But if we really do see, you know, sort of exponential or logarithmic growth in Tesla's AI capabilities, which is what Elon does expect, if that happens, Optimus will surprise a lot of people. So exciting on that. And then he also mentioned just the capabilities of combining Neuralink with Optimus and some of the things that could be done with that, kind of cyborg-esque type of things, which obviously would be pretty cool. Order intake, demand roughly tracked production. Tesla's got very high confidence in the long-term growth of Tesla, but mentioned on a number of occasions things could be volatile in the short term. Nothing new there. Elon reiterated, though, he does see a path to Tesla 10xing from here, and then he thought about, well, you know, the stock price is quite a bit higher than it was in recent times, in recent months. So Elon said maybe something more like a 5x these days, which would obviously put Tesla at around, you know, $4.5–5 trillion as, you know, potentially the largest company in the world. Yeah, investment. So we talked about that. Dojo R&D, they said that they're going to be spending north of $1 billion throughout the next year. So this is a decent chunk of Tesla's R&D spend. If you look at where they've been running for R&D, and it depends kind of what bucket things fall into. Some R&D spend can sometimes fall in other buckets, but Strictly talking the R&D line, Tesla's been spending about $800 million there per quarter. That jumped up a bit this quarter, but you're talking somewhere in the order of $3 to $4 billion per year. So it's a big chunk of their spend. And obviously right now, that's doing nothing for the business, right? Like it's going to, but it's not doing anything to help the business right now. Yet it is still impacting operating expenses, which is something we've talked about going back a long time in Tesla's history. Those operating expenses, those are hitting before they're yielding real benefit, especially the R&D line. So that's why I said, like, I don't mind seeing that line jump up and cause the operating margin to decline, because it's from things like spending on Dojo, which don't really have any relevance to the actual operating margin of the business today, but hopefully will improve things significantly going forward. So excited to hear some comments on that. Talked about how it makes sense to sacrifice margin for volume due to autonomy. The more vehicles you get out there, the more you can flip on to being autonomous and reap the rewards of doing that. They were asked about just progress in general. Elon said he's the boy who cried FSD at this point, but continues to believe that it'll be better than a human by the end of the year in the US. Not to say it's approved. So nothing too new on Elon's thoughts there, but he remains confident. And then he reiterated the price of FSD is low relative to obviously what the future value would be if this were to happen. XAI, they briefly touched on whether that would be like a conflict of interest with Tesla or whether it would benefit Tesla. Elon noted specifically that part of the reason it exists is because when interviewing talent, they had no interest in potentially working for a company like Tesla that's a $900 billion company. Even if there is potential upside in that, I'm sure there's equity considerations there to be made. And then in addition to that, it's just a different type of a team. Like we've heard, JB Straubel talk about how where Tesla is at these days, it just wasn't quite, the same as it was many years ago, where you've got a smaller team and potentially that gives you different roles or different tasks that you're required to do. So it's just a different environment. Basically, Elon's point was that there are people that want to work in that environment, and you can either let them go to some other company like OpenAI or whomever else, and then they're not going to benefit Tesla at all, or you can have an XAI startup and that can work side by side to an extent with Tesla, like SpaceX and Tesla have done for many years, and then hopefully that can actually be beneficial to Tesla versus just kind of losing out on that talent. So it's a tricky situation, but the explanation I do think makes sense. And then kind of the last thing, just some comments on costs. Commodity trends, they said seem to be deflationary. Nothing new on that. That's been the case for Tesla for 6 months now or so. And economies of scale continue to grow, with the exception, obviously, of this next quarter with the production downtime. So overall, I mean, again, as I said at the outset of, or I guess that the after the shareholder letter came out, I think this was a great quarter. Average selling prices were better than expected despite pricing adjustments throughout the quarter. I think cost of goods sold coming down more so than average selling prices came down is obviously a huge positive. We saw amazing margin from Tesla Energy going from about 11% up to 18%, and hopefully continuing to grow from that because we actually saw a sequential decline in volume. And obviously, as we know, higher volume usually yields higher margins. So excited about energy. And all of these numbers were achieved, beating analyst expectations with a relatively low number for regulatory credits. Probably one of the lowest regulatory credit numbers in, the last couple of years. So I don't think there's a lot here to be disappointed with. I think most things either came in at expectation or above expectations, which is really good. And I think Tesla showed a lot of focus on the right things on the call. They're talking about the things I want them to be talking about. No surprise, like this is a management team that I've invested in for a decade and will continue to invest in for a long time. So I'm excited about how they're viewing the business. It's obviously a bit of a rough patch right now while we're waiting to get to this next generation stuff, waiting to get to FSD. But I think the way that they're approaching these problems and the way that they're viewing the business are the right way. So a lot to be excited about. I'm pretty happy with the results. I haven't looked at the stock for a bit. I've been, trying to get this streaming stuff in order. It looks like we're down 4% right now, which is frankly pretty surprising given the magnitude of the beat versus expectations. And I don't think anything too negative on the call. But perhaps I'm missing something that's causing a little bit of that negative reaction. All right, so I think we'll probably wrap it up there. Again, really happy with the quarter. Again, apologize for the issues on the live stream. Trust me, nobody hates that more than me. I practiced, did a test run beforehand and everything was fine. So I don't know what caused that, and it's obviously frustrating. Just me here. I don't have like a tech support team that can jump on and fix things live. So we'll try to get those things worked through. And again, apologize for that. But that'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Thursday, July 20th episode of Tesla Daily. Thank you.